So we are deep into Q4 right now, and in the past 5 weeks, 336 quarterlies have been announced, their results, and we're going to take a look at them. So the first fact would be almost 15% of companies are loss-making. Now, this 14 odd percent is 47 companies, and 77, more than 3/4 of them actually made losses consecutively. So definition is at least 2 quarters of like rolling losses, right? So almost a third reported a drop in earnings year on year. So that's not a good sign, but at least the flip side is that 70% did not report a drop.
Yeah.
So
Also, a fun fact is that last quarters, right, is that 50% of them actually reported drop in earnings.
it sounds like some sort of fundamental improvement.
Yes, correct. Like a bounce from the bottom.
So a quarter of them paid dividends, and when we compared with the previous one, do you remember?
I think it's about the same also.
Okay, all right. Yeah. And of this 336, there are 16 companies that we find quite interesting. Unfortunately, we cannot share all of them because it would become a 1 hour or 2 hour long video. However, we will share 3. So the first one is this company called Persona Metro. It has seen a share price pump in just 6 months, 41%. Why is this interesting? When you look at a long-term price chart, so we are not fans of looking at price charts to tell us information, especially and more specifically in the short run. Call it 1 year, maybe 2 years. But when it's across multi-decade, share price is information. So the fact that they're down when compared to all time and they are flat for a very, very long time signifies that they are a struggling business.
Yes.
Right? So, but is this struggle going to continue?
Yeah. So we're going to be looking into their latest quarterlies and what information that we can get from there. So if you notice, quarter on quarter, they have been improving in terms of earnings and also revenue. So you can see over here, based on financial year 2023 compared to just 3 quarters for 2025, the number actually almost like 3x already. So there is a big jump in terms of the earnings.
And the costs, yeah.
Yeah. So it's already more than their 2016
Yeah,
numbers. Yeah. So 2016 was actually their peak of earnings.
But they're not at 2016's price, right?
Yes, correct,
so
correct.
2016's price is I think a little bit higher.
Yes, correct. A little bit higher.
But they're matching, they're going towards the...
Yes, exactly. So in 2018, there was a big drop over here. So if you see over here, there was a slight steep in price drop. It's because there was obviously the big election happened. There was a change in government. So that, created a lot of change in terms of regulations, especially for the construction and property development industry. So they also got mentioned over here, some of the infrastructure projects were being put on hold because the government want to recalculate everything. Maybe they want to scrap off some projects. So that also affected them. And not only that, they also face some sort of like a high construction cost. Back then also, steel rebar prices was quite high. So they have to like absorb a lot of these costs. On top of that, there's like depreciation charges and other amortization of their asset that is being acquired in 2017. So that resulted in their profit to drop in 2018. But if you look at recently, in terms of ROIC or our returns on capital, the numbers have actually improved. So if you look at this orange color line over here, previously they are about 9% in 2014. 2016, which was the peak, is about 9.53%, but recently it is 9.16. So it's already back to normal already. Gross margin as well as net margin also has been improving.
Funny enough, that is exactly what the share price looks like.
Yes, correct. Yeah, almost back to normal. But what's interesting is that they actually deployed more capital. By capital, they actually deployed more net debt. So if you look at the numbers in 2016, the orange color bar here, last time was nothing, but right now they have increased a lot of long-term debt. And that's why if you see, right, even though their earnings already surpassed 2016, the ROIC also is still like lower as compared to 2016. It's because they use more capital to make more money. So that's why ROIC dropped. But if you look at in terms of like 10 years gap, right, 2014 to 2024, cumulatively, you see that their net income is about 79 million, operating cash flow is 115, but their capex is negative 119. So which means they are in a negative free cash flow.
And the fact that they pay dividends, and I'm going to say that they are in quite a net debt.
Yes, they are in a net debt. So these dividends probably come from cash or maybe debt or maybe some of the operating cash flow. But if you look
maybe
at
some one-off that they paid.
Yeah, but if you look at their operating cash flow and versus net income, right, it's pretty healthy lah. I mean, which means it matches or actually it surpasses.
The only issue is that they don't have a lot of leftover for shareholders in terms of cash flow, which is what you would expect for a construction company.
Yes.
Because basically, if you look, the two important ones, the operating cash flow and the capex, it's pretty much. So it's no surprise, and that's why we always say that fundamentals match the share price. The share price has gone nowhere, right? Over
Yeah,
the
but
decade
recently they
plus.
just went up a little bit because net income just show improvement.
Yeah, exactly.
That's about it. Okay, second company over here is GDB.
So before that, just to go back
Yeah.
to the other company, would you say that right now it's just going back to something more normal, but there's nothing about the company that can signify a change in the general trend of this? Because what you're doing here is a 10-year combination, right? So this is 10 years. The behavior of the company is this 10 years. So will you say the next 10 years, of course, no guarantees, but the next 10 years is going to look similar, right? CapEx and OCF is much.
Assuming there is like no COVID-19, that's number one that affected business. Number two is there's no change in government. Like let's say Pakatan Harapan collapse and then PAS come in. Yeah, that will affect their business again. No? But so far, it seems to be like they found their footing already. They know how to play the game. So they can like constantly get new contracts, new projects, new order books, and then fundamentals are improving. So far, looks quite decent for Persona. Second
GDB.
company is GDB. This company also is up 54% over the past 1 year. And we're going to be covering a little bit about their past history and also what's their future prospects. So this is similar
All-time
to
high.
Persona.
Wow.
Yeah, all-time high revenue and also earnings. You can see over here, they are 3 quarters, they're already making 56.3 million. It's already double than their previous high, which is around like 20 or around 29.1 million in 2019. So if you look at their margins are improving in terms of gross margin and also net margin. So gross is the green color, net margin is the purple color. This one is already like bounced already, even surpassing the 2019's level. ROIC also start to show some signs of improvement. There was a drop in ROIC over here. We're going to be explaining a little bit why is it like so-so. So the ROIC was actually mainly affected by the earnings. So if you look at their net debt and also total equity, right, it's actually no changes. They're in a net cash position. So which means they're a very healthy construction player, whereas their earnings got depressed in 2022 and also 2023. And the reason why it dropped is because they are related to this project, which is called the 8 Conley. So
famous.
Yeah, in 2022. So this property developer, which is KSK Lands, they didn't pay GDB the work that they have done. So that's why GDB, like, they kind of like sued them. They took them into court. They said that, hey, you owe us like 120 million worth of work that's being completed. But then KSK like delay. And then I'm not sure whether they have the money to pay them out or not. But at the end of the day, the court like kind of like put GDB in favor lah. So technically speaking, it's not really GDB's fault. It's the developer that didn't pay them money that causes GDB's earnings to depress. So yeah, that's the reason why it dropped.
So let's say we take out the issue with 8 Conley. Let's say it doesn't exist. How much more improved GDB would be in your estimation?
Right. So most likely it's going to be like around 28, 25 million. So there's not much of a steep drop, but the drop is just because of, there's this one big customer that didn't pay. So yeah, if you look at the latest court case, right, the GDB gets some sort of like court enforcement on 83 million adjudication award involving the 8 Conley. So which means the court is right now in favor of GDB and they can potentially collect these 83 million from KSK Lands and Berhad. But we shall see if they manage to collect it or not. And if you look at in terms of the trend for net profit, obviously their net income is more than their operating cash flow. They are not really collecting much of a cash from their customer. So that's why you also see they have some issue with KSK, right? They always like do their work first, then only they collect payment. But when they record in their financial statements, they usually just say it as we collected. If let's say they didn't manage to collect, then most likely they're going to put like some sort of impairment in terms of trade receivables or maybe financial assets, all these kind of things. But if you look at their capex, it's very small only. It's about 31.54 million. So which means they are very asset light. Probably they subcon a lot of their things. They don't need to own a lot of property. And they are also kind of like a decent dividend payer. They pay about 50.62 million. So that it's about it for GDB. 44% of their profit is still not in cash. They still need to like ask their customer to pay. So what is the prospects, right? So one of the prospect is that actually is besides this 8 Conley that they managed to collect the payment, they also have 2 upcoming projects, or right now they are actually still work in progress, which is in Bukit Jalil, one of the hospital, and also the logistic hub in Klang, and one of the area that I cannot remember. So if you notice that the profits are still 44%, it's not in cash, right? That's why they also need to raise a private placement.
Right.
So that's why they pull out like 10% of the shares to raise about 39 million for working capital. And the private placement share price is about 41.9 cents a share, which is not too far off from today's price point, which is around 43 cents a share. So yeah, if you are getting it today, it's basically close to these investors who's getting at 41.9. So 2026 prospect is that their order book, they still have about 760 million as of 30th of September. And this entire order book will likely to be, recognized at the financial year end of 2026. So you already can like just straight away calculate based on, let's say, last year's revenue, right? I put it over here. Yeah. So you can see last year, or at least currently, they are making about 549. So most likely next year, we can see they make probably similar level, like 600 million-ish, because there's still like one more quarter that they haven't like realized yet. So yeah, there's still some sort of like earnings visibility for 2026, at least for GDP. But they are still constantly trying to get more contracts, but still nothing concrete yet. So that's for GDP. You got any question for
Nope.
this one? Yep. So last company. So if you notice, right, all three these company is related to construction, property development, and yeah, it's no surprise that they are doing well at the moment.
And maybe you can share that 16 companies, how many are construction?
Let me think. 16 companies, construction. I think it's majority is construction and property. Yeah, there's also some related to cement, which is also related to construction. Some is consumer, and also palm oil. Yeah, palm oil is doing pretty well. But palm oil, we talk about it, and there's nothing much to talk because it's just CPO prices only. But yeah, so back to this Mitra Jaya, they are up 163% in just 7 months. So you see there's a huge jump in terms of share price movement. And let's take a look. So you can see they are also the same thing. Their quarter on quarter is growing. Right now, they are making 49.3 million for just 3 quarters, and it's just half of its all-time high, which is about 118 million. Still quite far away from it, but then the share price also kind of like reflected a little bit, like almost half of it already. So yeah, just like we mentioned, it's still far from the peak. Revenue also is very low compared to its previous high. Same for earnings as well. Earnings is like still like halfway there. ROIC is still flat, not so much of an improvement. I think this business also is very hard for them to grow ROIC unless they face some sort of like depressed in earnings like GDP in the past. But if you look at their gross margin and net margin, at least it is some sort of improvement. And what's interesting is that this company, they have been paying off their debts a lot, which is very good. Previously, they had
rare for
so last time they have a lot of short-term debt and also some long-term debt. But right now, their long-term debt is basically non-existent already. They paid off everything. Whereas for short-term debt, it is still, it's still a lot, but then at least it is much lesser than previously, which is around 260 million. Right now, it's about 70 billion. So yeah, this is a pretty decent company that has been paying off.
So one thing I noticed across all 3 companies, if I can summarize, is that better than 2021, but not better than pre-COVID. Their fundamentals.
So for Mitra Jaya, yes. For Persona, it's just recovering back to pre-pandemic. GDP is better. So yeah, in totality, it looks pretty good for Mitra Jaya as well. Net income and OCF is almost the same. In fact, OCF is actually more than that. So which means they are collecting a lot of cash. CapEx, they spend about 161. Still quite small compared to their OCF. So they have a lot of free cash flow. And it's also the reason why they can pay out the most dividend compared to GDP and also Persona. So you can see that this company is pretty good in terms of cash collection.
Yeah, it's equally impressive that the debt is dropping as well. Right?
Yes. So they use a lot of their cash flow to pay off the debt.
Also, to be fair, the big chunk of the dividends here that you calculate came in 2015 to 2018, give or take, right? It's only recently 2024 they've got a big
because they pay out most of the debt, so they have like excess cash to pay out dividends. So yeah, it's pretty
They're doing the right thing basically. So this management that do things in proper sequence.
Yes. And recently they also managed to close data center contract with this company called NEXTDC, which is Australia company that they want to expand their data center in Malaysia, and they got a huge contract, which is about 801.8 million. And as you guys know, right, data center contracts, not to say the size are huge, but at least for them, it is quite huge. But it is known for their fast, number one is obviously fast construction. It only takes like 2 years or maybe less than that to build a data center. And number 2 is that the cash flow is much faster as compared to like if you build a condo. Because if you build like a condo, right, it may probably takes 3 to 4 years to fully collect the payment, whereas for data center is probably like less than maybe 1 year. You already can collect entire cash flow. So this gives them some sort of cash flow visibility for them in the future. And if you can see also, right, this contract, they need to be completed by April 2026, which is just like few months only. So that's why their prospect seems to be much more interesting in terms of like cash flow collection. So yeah, the final thoughts over here is that the construction and property development industry is still doing well, even compared to like last quarter, right? It's still growing. And we also get to know that some people who is working in the scene, they are getting a lot of fat bonuses thanks to the data center contract that they managed to like secure. Yeah.
So this is admittedly something we pretty much completely miss, right? Because of the bias that we have,
Yeah.
which we are fine. It's the phrase I will use is not our money to make. Just because we do not have an interest in an area doesn't mean that the area cannot do well.
Yeah.
So I think that's an important lesson.
Correct. But FIRL also, we managed to like initiate some property
Yeah.
development and construction. So if you're interested to know what are the names, make sure to check it out.
Yes, I mean it's more like just both of us, but our team, we have a couple that talk a little bit about construction.
Yes.
Yeah, and then one
Yes.
company we follow a lot is FPI. So recently they announced a big dividend, I think double digit,
50%.
right?
Yes, 50%.
50%. But there is a limit up, right?
Yes, correct. So there was a limit up last Friday after they released like this special announcement. So
It's a company we have educational write up on as well, right? So a few of our clients managed to hop onto that trade. Good for them.
And then also there's Jasa Kita and MPS. Jasa Kita is another company that they have been like giving out a lot of their cash as dividends. The dividend yield is about 30%. MPS is a lead market. This one, their dividend yield also is around roughly like 30% each. But we cannot participate because it's for sophisticated investors only. And last but not least is our thoughts is Q4. At least for those companies that will be releasing their quarterly at the end of this year, seems to be pretty decent, even though there was like this tariff impact. I mean, if you look at the tech guys, you look at some of the glove guys, they are all reporting like in terms of recovery in their revenue and also their earnings. So all in all, I think Bursa Malaysia, those companies listing over here, they will be reporting quite okay or decent numbers. But funny thing is that the foreigners are exiting, so I'm not too sure why are they exiting when they are actually reporting like better numbers ahead.
Well, I mean, foreigners have a very different agenda from us sometimes.
Yeah.
And you want to get a lot more of these insights, especially information that's hard to get on the internet, do consider hopping onto our educational platform, FIRL Pro. Inside, as I said, we have this thing called management notes. There's tons of information there about the company that if you did your own research, it will take a lot of time. I still encourage you to do your own research, but some of us have limited capacity, and that's where FIRL Pro come in to help you shortcut that process. We also have a lot of the write-ups. Just now I talked about FPI, we have one. We have a lot of other construction company write-ups as well for your own education. Some of the companies that we've talked about, Kellington, Futu, Velesto, although I think Futu now is a bit down, they've done pretty decent over the past 1 to 2 years. And if you want to get a taste of what's inside, you have the free sample link, which you can click on in the comment section and description. I'll see you in the next video. Bye-bye.